Hey, good afternoon, traders. This is Trader Tim from over at eminimind.com doing another Monday market analysis video. We're starting off looking at the S&P, and at first glance on this chart, you can pretty much see a quite solid uptrend line if you just kind of connect some of these lows. So when you zoom out to a daily chart like this, even if you were to just connect some of the bodies and have some of these tails intraday sticking down below the trend line. When you zoom out like this and you look at prior highs, if I hold my cursor here, and the uptrend line, this is actually a pretty good thing to have happen with the markets in terms of getting some of the profit taking out of the way, shaking some of the folks out of the market that are sort of propping it up in a way and making things kind of stall out intraday. Like before the last couple of days, intraday, it was mostly a little move one way, a little move the other way, not a lot of sustained follow through moves. The one exception would be the ninth, where we had a pretty strong trending day. But by and large, a lot of these, days where we were making new highs, they were really small body candles and really didn't produce much intraday price activity. So when you get a nice little shakeout like this, it can really help to kickstart the intraday moves. Most of you that have been following the channel for a while probably positioned pretty nicely with some puts up here at highs to capitalize, at least in the short term, on the move down. I did add some. Was it Tuesday last week? Tuesday or Wednesday? I put on a put position, super short term. I ended up using the weekly, the July 23rd, just because they were so cheap. I did sell some on Friday because we had what I thought was a kind of a solid move down to a little bit of a steeper uptrend like that, but capitalized again on the next move lower here today. And one question I get is like, how many puts should you buy to hedge a position? And so if you figure like the puts I've got were basically $2 or $200, and so when you get a move like today, they're up in the $1,400 range, $1,500. I haven't looked in the last hour or so, but so you're talking, let's say, like $1,000 move in the option, and those were just at the monies. I did the SPY, and what were they? 435s, I think, is what it was. And so basically at the money on the close on the 14th, um, you can really hedge yourself for. I didn't run the numbers on what percentage were off of highs, but a 10-point move in the underlying, you're looking at, within an increase in volatility. That's really the big benefit. Buying the puts when the market's up as the hedge, when the VIX is down, that really adds a lot of benefit. It's like buying a house, you know, 30, 40,000 below the asking price. You're getting instant equity. If you were to put on the position after a down day, or like today at the open, um, you're it's not that it's too late if you're going to try an intraday play. And I actually did put I tried a short on the ES here at the halfway back of the morning right here. And so that one looked like, so we were making higher lows, higher lows, higher lows, broke the swing low. I drew up the short like this, and I had the order at 52.50. I just didn't get filled. I probably could have put it down an extra tick, but I didn't. And so I didn't get filled, but I did put on another couple of puts at this point to ride it into the close. Volume. Look at the move down this morning right at the open with very strong negative breadth and a very negative advanced decline line. We had pretty good volume on the open, and then look at these candles rising to that halfway back short. The volume was going down, down, down. So, it was pretty much expecting a sell-off in the afternoon, either into the close or, down in this area, basically making new lows. So that's why I added to the position, especially since it was already well in the money. And so what I think the takeaway is that you want to be putting on the hedge before the market actually dumps. By the time you're sitting there saying, "Oh, I should have done this," it's likely too late. In today's case, when you get a gap down, ignore this wick here. That's not intraday. Um, when you get a gap down with strong negative breadth and advanced decline line, you can sell that at the open. But by and large, the meat of so let's say the $200 option went to 1,200. That $1,000 gain has already been basically had on the open at the gap down with the increase in the VIX. So anything from here on down, you're paying a premium because the VIX is up and the market still has to move down. You're putting on a brand new position. So sometimes it's best if you're not in to just wait for an opportunity to either get long, either to add to a long-term position, which I will definitely be doing on the pullback here, and sometimes it's not in your best interest to chase it down, especially like in the S&P right here. This channel that we've been in has been holding pretty strong. I know there's some, new COVID-related, concerns and things like that out there, but by and large, the stock market's going to move a lot faster than, say, the housing market. And so some of these underlying fundamentals of the economy don't necessarily get reflected on the day. So this week we've got housing starts tomorrow, jobless claims, existing home sales on Thursday, PMI composites on Friday. So a handful of news announcements. We also have some earnings announcements coming up, which could start to add a little bit of volatility into the markets. But it's almost like if you think of buying a house and you're going to sell it, and you're going through a real estate agent, well, you're going to have to pay real estate commissions. So in order to ensure that if things go south and you really don't gain much appreciation on the house and you got to get out in the pinch, you got to be able to buy it at a discount when people are not necessarily in a frenzy or looking or somehow get it at a deal. And you can do that with your hedges by putting the position on when the market's up. And that 1 per 50,000 tends to work pretty well for me because when you get these bigger moves, that kind of covers the temporary down move in your position that you're hedging. So if you're using the Vanguard VUG fund, and that's what I'm hedging against, you can pick up sometimes $4,000 or $5,000 on a move down. If you only have, if you're, let's say you're working with $200,000, so you buy 4 puts and you make $4,000 on, a 3 or 4 day move down, and then you lock that in, let's say today at the close. You don't need to be overly greedy, or sell 3 of them and keep 1 in case we do go lower. And then the market turns around, even if it's not in the next couple weeks, it could be 6 months down the road, and returns higher. You're pocketing on those little down moves. And let's say that it goes against you, the hedge, and the market goes higher. Well, then your long-term position is outperforming your downside hedge. So as far as intraday goes, I really didn't have a lot today, unfortunately. I tried to get in at the halfway back short, and that was really it. I put the option positions on there and just kind of let them go. A lot of times on these big gap days, there's not as much intraday sometimes to do, especially when it's just new low tick and then a new low tick and then a new low. You can sometimes spend a lot of time chopping around, like here at the 50% retracement. Yeah, you can maybe get in a short like this and ride it for 4 or 5 points, but it can be difficult to catch the full leg down because there's a lot of quick undulation around some of these bigger levels. So don't feel bad if you weren't positioned necessarily intraday for today's move. But the good news is we should have a lot of good activity in the days and weeks to come because now we've pulled back nicely. If I go to I want to go to the ES chart here and look at the daily chart, and you can see those trend lines that I was referencing. Here's the steeper trend line that we're definitely on the underside of it, but right back in this prior high territory, which should act as some nice support. And then, if some time goes by and we sort of work our way towards this less steep trend line, that would be fine. If I see what we get if we draw from the next low to high, look at this negative 23% retracement. We did go beyond that. Anytime we're at negative 23, that's a opportunity to put on a hedge, and this is the first time I'm drawing up to 50% on the daily, and it looks like we're actually pretty close to it. The other thing to look at is the gaps. Look at how we come right to these unfilled gaps. And so when you are moving in a direction, keep these gaps on your chart because they can be sort of magnets if we do get some trending action. Last thing we'll look at here is let's take a look at the VIX and big spike and corresponding. So if we go to the 21st of June, we can see today's move is above the high in the 21st, and then if we swing over to the SPY, and the 21st of June is actually over here, and we did not go lower than that price. Could be a little bit indicative that more selling is on the horizon with the VIX spiking above that that swing high. If we go back here, we're still below the 19th, and so if we look at the 19th, that's all the way back in this area. So with the prior highs, that might slow things down. But if we do break the 61.8, then we shouldn't have any problem retesting the 50% that we kind of started this up move at. So just, I try not to get super tied to one direction and try and, okay, if I'm drawing up a 50% retracement and it happens to line up beautifully, it doesn't necessarily mean that it's going to work out perfect. It doesn't necessarily mean that, oh, hey, we're closing at the 50%. We're going to, we have to go up from here. Like, definitely account for or look at the other side of the trade. Whenever you're interested in going long, ask yourself who might be interested in going short. And just as a checks and balances, you might still want to go long, but it's a good opportunity to say, okay, well, 42.25 is the halfway back long. That should likely add some support with these prior highs. But if we break the 61.8, where could we go? Well, we'll make the full retracement and should come back here to like a 40.50 on the S&P. So, and in the meantime, should have a lot of good intraday opportunities now that we've kind of gotten out of this. It was really from the last run up, mid-June to those highs. There was just not a lot intraday to do. I also had a little vacation in there, but even aside from that, intraday there wasn't a whole lot that I was seeing, and the ranges were pretty small as well. So tomorrow morning, live trading session as we always do on Tuesdays. You can check that out at eminimind.com/VIP. Thanks, and we'll talk to you all soon.